Hey, good afternoon, Bob. Trade Genius. It's the 2nd of March, and I think the strong dollar is starting to take its bite. Yellen speaks tomorrow. Don't know if there's a message being sent here, or there's just a lot of calls that need to be evaporated because of that ramp on Trump Wednesday. But let's take a look here. GDX sold off down to the S2, and we'll see if we get a relent with the yen tomorrow and see if we get a bounce on this, which would be a good trade for some dust puts. And so we're going to have to see on this. It's going to be really interesting to watch the dollar because it's really starting to cause some turmoil. The financials are selling off even though there's a higher than yesterday's rate hike percentage, in the betting pool. So as financials come off, then the market's in trouble because this was one of the big lifts. Nugget hit S2 as well. We'll have to see whether or not we get a bounce or if we had deflation coming at us here. SPY, we've given back half, a little bit more than half of what we took in from the Trump speech ramp, and for me that was it hit a yearly pivot R1, and it also it's so stretched on the VWAP, and there's so many calls. I'm sure market makers are out of position, so they max pain is 236.50. I'd be amazed if it got there, tomorrow, but because max pain hasn't been exactly right on. But I just took a look at it today to see where the activity is, and the market really struggled all day today. So I wouldn't be surprised. Usually Fridays are trend day, and I don't know if they'll trend it down into Yellen or they'll try to trend it up into Yellen. We'll just have to wait and see. But my thinking is that we're going to go all the way back down to the yearly pivot at some point, which is really far from here. So like 300 points. Emerging markets didn't like it. A little head and shoulders on this thing. So shoulder, head, shoulder, neckline, could fall down, probably hit the moving average here. CHK, oil is weak. We got stopped out. Trade was a bust. VXX, I'll talk about volatility in a second. We actually made money on XIV today before it rolled back over. Gold's holding up pretty well. We'll just have to see as long as it stays above the moving average and VWAP. Be pretty happy. IWM, we have call credit spreads on this, and they look like they're going to be evaporated for tomorrow. So pretty happy about that. Looks like I'm getting a trend change on it too, which will be great. I'll keep selling calls against it. We also have TWM. UVXY, so it was pretty flat today considering it all, but they really ramped the VIX down pretty hard. I'll show you in a second, just to try to keep this market from, I guess, absolutely collapsing. Same with the yen, and it still fell 0.5% after falling 0.25% from yesterday's high to close. Well, actually almost 0.5% yesterday. SLV, a little bear flag there. We'll see what happens with that. Southwestern, looks like it's rolling over again. Looks like the oil thing is dead. Natural gas doing good. We're in natty gas and profitable, and up like 2% on it. We'll see what we do with it, but it looks like it's ready for a trend change. XIV, we bought a position. It promptly went down to stop us out. We bought it back right after Europe closed, and it moved up 2%, which gave us a 1% gain. We got out, and it promptly rolled right back over hard. So we're happy we made the trade and made our money, and it moved up and went down almost 1.5% from there. So we have to be near the end of this XIV game for a while. I was just amazed they showed up today with the market down. But, vol has to start picking up here at some point, you would think. Twitter, I'm going to go past that. I want to just get to oil right now. Everything else is just talk. Oil broke down. It's almost at its low from February here. And if it breaks that, we're going to go down pretty far, probably in the mid to upper 40s. It's just, I can't believe that these hedge funds bought $1 billion worth long, and now they're going to get crushed. So it's just amazing how you can be so obvious and so wrong on it. But they are, and I don't know who the buyers are. Maybe they're sovereigns trying to keep the price up, but it's just not working. I mean, if you think about it, restaurants are down, retailers are down, auto sales are down, inventories are skyrocketing, home sales are down, refinancing's down. They're going to raise rates into this. None of it makes any sense to me whatsoever. Healthcare's going through the roof. I don't know where they think, and people are at peak credit, so I don't know where they think people are going to get their money to live. But, it's just, we're out of sorts. And if everything's on the come for Trump, he's at least 1 year away, and how much can he really do and spend? Markets of $3.2 trillion since he's been elected. $3.2 trillion. That's 12% GDP growth. The market's supposed to match GDP growth 1 for 1. It's already overvalued historically, and then they add this to it. It just boggles my mind. People just tell me, hey, money's coming in from Europe, it's confidence, but at some point, doesn't somebody else take the chips off the table? Or we just get to a point where we just have two bidders bidding each other, and they look at each other and say, oh shit, and they stop, and then the thing just collapses in on itself. I think we're probably at that state. And yesterday we had 30% of the volume was at the highs, so they distribute it to somebody, either Europeans, the Asians, or retail, and the market has fallen 20 points since then. So I don't know. I'm just not bullish. It just it needs to be reestablished with reality here a little bit. And so I think Yellen raising the rates is going to crash the market. She doesn't raise the rates, it's going to boom gold and silver. So take some lotteries on both sides of it and see what happened here the next 2 weeks. Anyway, it's Bob from Trade Genius. You guys have a good one. I'll be back at you this weekend. Thanks. Bye.